My stock portfolio has made over $125,000 over the past 2 years, an increase of over 200%. And in this video, I'm going to be reviewing my portfolio for February 2021, looking at how it's performed, any changes that I've made in the actual account, and what I think I'm going to do going into March. In total, my stock portfolio now includes 7 stock positions, which is one more than it had last month. Those positions are Zoom, Datadog, Crowdstrike, Cloudflare, Okta, Snowflake, and Docusign. I don't want to do too much intro, so let's dive right in by starting to look at my Charles Schwab portfolio. And remember, if you like this video, make sure to hit the like button so that the YouTube algorithm promotes it more. So this here is my Charles Schwab account and how it's performed over the past 2 years. You can see that over the past 2 years, it's increased in value by over 350%. Now, the reason I said in the intro it's only increased 200% is because some of that value increase is from me just adding money to these accounts, while the majority of the increase is from actual stock appreciation, which we'll see when we dive into a little more detail. Now, for those of you who watch these videos every month, you'll know that my portfolio is actually up less than it was last month. And that's because I'm recording this video a few days into March, and we've seen a pretty major market downturn for the types of stocks I invest in, which are mostly tech stocks, especially involved in software as a service or platform as a service. So to see that more clearly, let's go to the 1 month view of performance. So you can see here that going into the start of February, my portfolio was at $159,517. And where I'm currently doing this video on March 4th, we're down to $146,000. So it's a drop of over $10,000. There's several stock positions that are dragging down this portfolio, and I'll get into those in more detail. Now, I told you in January that I kind of expected this year in the stock market to be a little bit calmer than 2020 because we wouldn't have a presidential election and hopefully we wouldn't have the start of another global pandemic. The problem is that hasn't really turned out to be true because we've seen some new paradigms with meme stocks, for example, as well as just general fluctuations in the stock market, which you can see in these account values that have gone up and down pretty dramatically over the past 3 months. But looking at the overall value can only tell you so much, so let's dive into the individual accounts to see how those individual stocks are performing. Now, as you may know, I have several different brokerage accounts, but 99% of my money is invested between Charles Schwab and Vanguard. The Vanguard account is a Roth IRA, which means it's tax advantaged, and I add $6,000 to that every year to try to max out the Roth IRA. And then the Charles Schwab account is any other money that's left over. The reason we're going to look at this Charles Schwab account is because it has this great feature here where it adds up all the different positions between the two accounts. So let's look at them one by one, starting with Crowdstrike. Crowdstrike was my largest position going into February, and it's still my largest position today at a market value of $42,282 right now. And that's split between both Vanguard and Charles Schwab. This stock is one of the big reasons that my portfolio is down so much this month, because if we look at this stock chart, you can see that the stock absolutely took off back in November. It hit a peak in February and then it's dropped off dramatically since then, probably about 30% from where it was at the high. But despite that huge drop, I'm still up overall in this stock. And in total, my gain is over $30,000 in this stock on a cost basis of only $11,000. So it's still more than doubled despite the fact that it's down 30%. The next position that we're going to look at is Datadog. And this is the second largest position in my stock portfolio. This is again split between Vanguard and Charles Schwab. In total, I now hold $33,000 in this stock. And that decline is because, again, the stock price has declined over time. Now, in total, I've only made around $10,500 in this stock off a cost basis of almost $23,000. So that's a little bit less than a 50% gain compared to Crowdstrike's more than tripling. Now again, if we look at Datadog in more detail, we can see that this stock is fairly volatile. It goes up and down pretty consistently, but the reason that it's down so much currently is because it hit a high back in February, and now in March, it's gone from almost $120 down to $80. So again, a decline of around a third of its total value. This is gonna kind of be the general story that we're gonna see with a lot of the stocks in my portfolio. Next up is Cloudflare, which I've made several videos on, including one reviewing their most recent earnings report. Cloudflare in total is a $26,700 investment for me, so now it's my third largest position. And this stock is also down pretty substantially on the month. In total, I still have almost a $5,000 gain, but that's on a $22,000 investment. So of the stocks we reviewed so far, that's obviously my worst performer overall. Part of that is because I invested in it a little bit later, so it hasn't had as much time to grow. And then part of it is just, again, the fact that the stock has dropped recently. So if we look at this stock here, it's gone from around $95 to, looks like it's getting close to $60. So again, almost exactly 1/3 of the value has dropped off. Now, because all three of these stocks so far have dropped by around the same amount, it leads me to believe that this is more of a sector rotation around from these tech, high growth software as a service stocks and into different areas of the market rather than an issue with those individual companies. This accounts for the fact that they're decreasing by the same percentage amount, and it also shows that my general thesis in these companies doesn't necessarily need to change. This is just a temporary storm that we're going to have to weather, and then we can decide if we want to either add more money or pull money out of different positions based on some further analysis. So next up, we're going to look at Snowflake. Snowflake is one of the new positions that I added to my portfolio this month. Now, I told you in my last portfolio review that I wouldn't be doing these reviews as often unless there were major changes in my account, and Snowflake is one of those changes. So I decided to invest in Snowflake because they saw a huge decrease in their stock price, which brought their valuation closer to what I think they're actually worth. Now, Snowflake is an extremely fast-growing company. It's growing at over 100% revenue each year, and so because of that, it has a very high valuation. Now, in total, I only have $12,000 in Snowflake, and that's actually a decline from the amount that I initially put in of almost $15,000. So I have almost a $3,000 loss in Snowflake so far. Now, this has been a pretty short-term investment. I basically put all that money into Snowflake right before all these stocks started dropping, so it's not super surprising to me that this one is also down, despite the fact that Snowflake had actually decreased before. So with Snowflake, unlike these other companies, it actually peaked back in December at almost $430, and then where I bought in, it was dropped down to, I think, around $240, and now of course it's dropped even lower. It's getting close to like $225. So I think that this stock could potentially drop a little bit more in the future, but again, at this point, my thesis is that this stock is just dropping along with the general sector rotation away from these stocks, and it doesn't represent a fundamental issue with Snowflake at this time. We'll see if that turns out to actually be true. The next stock we have to look at is Okta. Okta is one of my smaller positions, but I've held it for quite a long time. In total, it's just a $12,000 position right now. For a basis, I only had $6,500, and because it's had a long time to grow, it's made around $5,600 in that time. Okta, like all of the stocks, is down a little bit this month. It peaked at $294 back in February, and now it's at almost $200. So again, almost exactly 1/3 of the value has dropped out over the last month. Again, supporting my theory that this is a general sector rotation. The next stock to look at is Zoom, which is probably the stock that I've talked about the most on this channel. My Zoom position is substantially smaller than it has been in the past. It's now only $6,500, and I talked about some of the reasons for why I decreased that value in an earlier video called Why I Sold Zoom. Now, unfortunately, Zoom is the only position that I actually trimmed in February. I trimmed off a little bit extra before they reported earnings, which turned out to be a big mistake because Zoom's earnings were actually super positive and the stock actually jumped after earnings. Now, in total, it only shows a $1,600 gain in Zoom, and that's because when I sold around $15,000 out of this stock, that took a lot of my gain with it. So in total, this is now probably less than a 50% increase overall in Zoom. And if we open the stock up, we can see there's this little spike right before earnings for Zoom. And then after that, it kind of fell off a cliff along with the rest of them. I think, again, kind of going along with the general sector rotation idea. Now, the last stock we need to look at is another new stock to my portfolio this month, and that stock is Docusign. Docusign provides services for electronically signing different forms, and they did really well during the pandemic because a lot of stuff was being done remotely. And my theory was the fact that once people realize how easy it is to do all this stuff remotely, there's no reason to send out a notary to your address to actually get something signed, or have to book out a whole office or a conference room to sign some paperwork. So if Docusign saves companies money, why wouldn't they use it? Now, in total, my Docusign position is my smallest position at just over $5,000, and I had invested around $6,000 into it originally, so it's a little bit less than a $1,000 loss overall. Again, that's because the stock dropped a little bit this month, and if we look at the specific stock chart, it peaked at around $275, and now it's getting close to, it looks like $190, so again, around 1/3 of the value has dropped since February. So now looking at my equities total, we can see that I have $138,000 actively invested in stocks with around $8,000 in cash on the sidelines. I'm not trying to time the market with that cash. It's just money that I've slowly been adding to the account, and I haven't quite figured out where I want to deploy it yet. In total, I've lost just $4,000 just today on the day I'm filming this video, which shows just how volatile the market has been recently. And in total, I'm currently sitting on equity gains of around $49,000 in unrealized gains off of a basis of just under $89,000. So a little bit over 50% gain. These huge losses right here aren't super worrying for me because I don't think there's anything fundamentally wrong with these companies. I think that the market has just decided that these stocks have gone up for too long, and so they're going to pull money out of them temporarily. We've seen this happen tons of times before. It happened back in 2019, and I didn't pull my money out then, and because of that, it's gone up substantially. It happened in 2017. The stocks dropped almost 40% at that point, And again, I didn't pull my money out, so they kept going up. These general fluctuations in the market just happen. And I think that one of the differentiators between people who do well in the market and people who don't is your ability to withstand those fluctuations without panicking. So for this month, I'm not planning on making any major trades. I'm still going to be looking at that cash that I have on the sidelines and trying to decide which stocks I want to deploy it to. And I'll probably decide that once this latest round of earnings finishes up over the next couple weeks. But other than that, I'm not going to sell out of all my stocks and panic while it's at the bottom. The last thing I would want to do is sell out at the bottom and then see the stocks rise immediately afterward. But let me know if you personally invest in any of these different stocks. Also, let me know if you have a theory for why all these stocks are dropping currently and what moves you're making based on the market drop. Make sure to leave a like and subscribe if you enjoyed this video, and I'll see you next time.